So let's talk about this real quick. MWR Fundable360. The primary goal for this, what makes us special, what makes us unique, is right from the get-go, our motivations, our strategies, our techniques is to create separation between EIN and SSN. We're trying to let the community know if the government says an EIN is a person, then why would we warrant another person to stand guarantor for the first person? So we're saying, no, if the government says an EIN is a person, then let that person run. And we're going to build up footprints. I'm going to share with you how we do that. We're going to build up footprints to do that. So what is Fundable360? What is the MWR Fundable program? Essentially, at a nutshell, we're a fintech company, financial technology company. This means we have systems that in our systems intrinsically measures algorithms, measures analytics, and formulates certain things, manipulates certain things so that we can create accelerated outcomes for any business, whether it's startup or run-up. We had a business enroll that's been in business since Monday. They had an EIN issued on Monday. Today's Thursday. It's 3 days old. I'm certain they don't have their act together. I'm certain they don't have bank accounts, websites, emails, phone numbers. I'm certain they haven't made a nickel in their company, but they got started with us so that from the get-go, they never have to make some of the mistakes that we may have made in business by conjoining personal and business assets. So we want to keep that separate. So real-time business scoring, real-time. What the fintech does is it helps the business owners see how the banks see them. We're always trying to figure out what the banks think about us. How can we maneuver the system? Well, what if we knew? What if we knew everything the banks saw so we could shore up our identities and profiles before we brought it to the banks? That's what the fintech does. And it's transparent, it's in real time, and every business owner has access to this in our system, and they can see everything. It's so robust, right? An in-house concierge team, what does that mean? That means there is staff within our company that works for every business owner we bring on as though we're their employees, except that we're not on their payroll. They're on ours, right? So we take all of the grunt work, and it is grunt work, away from the business owner, and we focus on making sure their credit profiles, their banking profiles, their credibility, their lendability, their fundability all matches up so that business owner can stay in their lane, do what they're doing, and know in the back of their minds there is a team that's working full-time for them. That's what in-house concierge team does. That's how we service, and that's how we provide. Perpetual funding sources. Having the ability to get structured once correctly, and then wash, rinse, and repeat every time you needed additional funding, never having to restart that process. It doesn't work now. It doesn't work that way. Imagine if you got approved with a mortgage lender in the personal sector and bought a house. And then every year you wanted to buy another house, not sell the house you're in, buy another house, and you never had to fill out another application. And that lender or a different lender said, hey, if you work well with that lender, we'll go ahead and lend you money as well. Well, that's how business funding works. So when you get approved one time in our system, structured correctly one time in our system, it'll lend you opportunities to have perpetual sources of funding without having to go back to the original application. This does not work in the mortgage business. So if you got confused with that, make sure you understand. Every time you buy a new property, you got to fill out all that paperwork all over again. Fill out and apply all over again. Qualify all over again. Ratios, back end, funding ratios, debt to income, all over again. You don't have to do that in our system. You build it right the first time, and then you can use it over and over and over again as you need it, right? Continuous increase lines. We have delegate underwriting credentials with over 400 banks and lending institutions and trade lines. What does that mean? That means if it's approved in our system, it's approved on theirs, because that's the beauty of our fintech. It has real-time algorithm exchanges with all of these banks. So we're underwriting and approving and structuring and manipulating and maneuvering and repackaging based on their published guidelines. So when we call the bank and say, hey, US Bank, hey, Chase, hey, Wells Fargo, this company meets your standards, it meets their standards. That's what delegate underwriting means. And the bank says, all right, if you've verified them, they're good for us too, because that's what delegate underwriting means. And we have those credentials. No premiums on rates. This is special. And this was a big deal. And I know, and I just want to congratulate your leadership, because when they were vetting us, this was a big and highlight point for them. They wanted to make sure that we'll never get into a situation where there's predatory occurrences, where we take advantage of the community or people. None of that exists here. No premiums on rates means it's a direct pass-through from the banks to our client. So when we match a client with any lender in our program, whatever that lender is issuing our client are the same rates that they're issuing their in-house banking clients. Case in point, if we do business with Chase for our clients, Chase is going to offer our client the same rate that Chase offers its clients in their business banking program. So no inflation on rates. You don't get to pay, if you went to Chase, you pay 6%, but if you came through MWR Fundable 360, it's 16%. It doesn't work that way. If it's 6% at Chase, it's 6% for us, it's 6% for our clients. This is special. It is unheard of. If you've been in this space, like I have, I've been a client before, where I not only paid for the service, but I also paid a percentage of every credit line I received, 10 to 15%. So if somebody gave me $100,000, I paid between $10,000 and $15,000 in fees. And I paid them every time they brought me a new credit line. And I was paying a premiums on the rates because they were getting a kickback from the lenders. And I was happy to do it because operating capital could change or make or break your business. I was happy to do it. I was happy to pay the fee. I was happy to pay the premiums and rates. And I was happy to pay a commission every time they brought me a new credit line because cash is king. And we know businesses understand that. So, but none of that exists with us. Pre-approvals up the wazoos, right? You could have all these pre-approvals stacked in your dashboard, and then you use it when you need it. So as we start to take you through the tiers, escalate you through the program, level 1, level 2, level 3, each level means more funding, more opportunities, better programs, better terms. You can decide, well, I don't need it all right now. But in the back of your mind, know you're pre-approved. And once you're pre-approved in our system, you can stack it and access it when you need to. Imagine how it changes the mindset of a business owner if he knows he's got $500,000 of pre-approved credit line as and when he needs it. If he wants to buy a commercial property or a boat, he has the access to do that. And we have the means to provide it. So this is very exciting, right? So what does Fundable 360 do? We help businesses establish business credit from startups to run-ups, like I say, and we're so proud of that. We structure our best to make sure that we can separate EIN from SSN, often with no personal guarantees. Now, why is this important? And I'll share this with you, and I think I've shared it with some of the people on this call. In 2020, when the pandemic hit, and it took the whole world down to its knees, I was one of those companies that became a casualty. I had to shut down two companies that I was operating at the time, just because we couldn't operate in that environment of the pandemic. One, we didn't see it coming. And two is we didn't for sure see how long it was going to last. And it crippled the industry that we were in, and it crippled two of our companies. But guess what? Till today, I am making payments on those businesses because we had open credit lines with personal guarantees. Now, I'm not suggesting no personal guarantees means no responsibility. I'm suggesting if calamity happens, if crisis happens, if something catastrophic happens, let's make sure it doesn't impact the business owner or his family, and so they can move on. So we're very proud of that, right? And our concierge calls, they're hands-on. This team works for the company. This team works for our client. They report to every client like they're the employer. The concierge team, their only job is to make sure the business owner can keep their eye on the ball, succeed in business, and position themselves for better and better credit terms. It's an unbelievable situation, and I'm very proud of that as well. So who qualifies? Who qualifies? In essence, you need an EIN to qualify. LLC, S Corp, C Corp, you qualify. The better you are structured, the faster things move. But like I said, we had a business that qualified for an EIN on Monday that we enrolled today. They have nothing structured, but at least we're going to help structure them. We're going to make sure they do all the right things so they never have to worry about fixing anything because they're not breaking anything. So that's the beauty of what we do. So if you have an EIN and a business bank account, we can definitely start the process. We can definitely start working with you. We can definitely make sure that we put all the right steps to build your footprint so that we can show the banks that you are an entity and not a person. So in 60, 90 days, when it's time to get you qualified for credit, they stop asking personal guarantee questions. They stop asking social security questions. They stop asking things because the entity is independent of all of that, and it has an identity of its own. So that's why we want to start as soon as possible. The soonest, the better, right? Think about it for a second. How many of us wish we were back in our early 20s with the stuff we know today? What would we do different in real estate, in investing, in money management? So imagine that. Why would we want to wait to help structure a business the right way if there's an opportunity for us to go into a proven, systematic, methodical system that guarantees success? We want to talk about that, right? What's not required? Financials, collateral, balance sheets, P&Ls, owner's personal credit information. Now, that's not to say if a business has it, it doesn't help. It does. It just means it's a little faster. They're easily more verified. But it doesn't mean that a business should wait till they acquire all those things before they get in the game. Because it's almost like saying, we don't want them to make mistakes before we have to fix it. But if they have those things, we'll make sure we massage those things as well. Now, the other thing, we talked about this, right? Separating EIN from SSN. We talked about having proven strategies that speak both sides. They speak to the banks, they speak with Paydex, they speak with Dun Bradstreet, they speak with Experian, they speak with Equifax, and they're making sure that everybody's communicating the right and correct information all the time. This is so valuable because once you build it once, you never have to do it again, right? Now, we have a service fee. Why? Because one, we're a service company. But the difference is, unlike back in the day where I had to pay a much higher service fee, and we had to pay for every credit line that we received, and we had to pay almost double the rates that were being offered, none of that exists within the MWR Fundable360 program. We charge a flat fee of $29.95. And let me tell you some of how these fees work. This flat fee allows us to do a few things. It allows us to make sure the technology is always up and running because there is cost associated with managing that. It allows us to make sure the concierge team is being paid to do the best job they possibly can for the businesses that they're servicing. And that could happen, by the way, for a long time. When a business enrolls with us, there is no time for the service agreement. It is perpetual. That means if a business enrolls with us and they want to keep using our platform for 1, 3, 5, 10 years, they'd never have to pay us another penny again. There is no monthly subscriptions, no annual renewals. That $29.95 gives them perpetual access to our platform, their profiles, their approvals, their management, their real-time reporting, the indexes, the analytics, all of that for as long. Plus, it gives them perpetual live access to their concierge team on our payroll. So when you think about it for a second, $29.95. Some of that gets paid out in commissions, and we have a commission structure inside of MWR that's going to participate in some of those $29.95 fees. The rest of that goes towards maintaining the program. And when you think about it, if we were truly servicing a company for 3 to 5 to 7 or 10 years, and they called us even once a week, and they spoke live with our concierge team, and we made sure we were doing all the work with them behind the scenes. A lot of that's manual work, by the way. It's hands-on work. By the time it's all said and done, it works out to about 17 cents per hour. So this $29.95 is not what keeps our lights on. It's what keeps the engine moving so we can go on and doing bigger and better things. And I'm going to show you how we maintain some profitability because it should be important to you that we're a sustainable company as well. because as long as we can sustain, we can continue to do good work. So they get to use our fintech when they enroll. They get to have access to their concierge team in-house with us. No premiums on rates like we explained here already. Continuous new lines without reapplying. No gotcha fees, no trigger fees, no trick fees, none of that stuff. It's all flat disclosed. And here's the best part. If we can't do our job and help them get corporate credit, and we can't guarantee that they at least see a $50,000 credit line extended to them, then we give them their money back. Because here's the reality. If we can't do our job, why pay us to do it? But here's the beauty. If for some reason we have to refund their money, they still get to keep the work we have done. All the analytics with Dun Bradstreet, Experian, Equifax, the banks, and everything else, that doesn't go away. It's all done, which means the structure is set. It's good. It's in place. But if we can't perform, that work is done. They get to keep the work. The work doesn't get wasted, but they get all their money back. Now, I will also say this. We've never had to issue a refund. Not once. We haven't done it once since our existence. And that's not because we play hardball. It's just because we're good at what we do. It's a methodical, systematic, almost scientific process. Our system is down to a science. We know if we do this and the business owner does that, it equals this result. If I do 2 and they do 2, we equal 4 every time. And that's why we have the confidence to issue the guarantee. And you should feel good the fact that we have that safety net for everybody, because we don't want to be transactional. We want to be relationship. And that's relationship in the past tense. It almost sounds like a new word. But you get what I'm saying. Hopefully you guys are still with me. So what's our promise? Our promise is we guarantee success or your money back, and you get to keep the work we've done. I believe we're the only company in the space that makes that guarantee. And we're super proud of it. We're not afraid of that. No premiums on rates. No more additional fees. What's the catch? The catch is this. If we do a good job and we campaign and we lobby for the business owner who is our client, who is your client, then we're going to make sure there's a good match between what a bank is offering and what that business owner needs. But here's the beauty. We did all the hard work, right? We found the client. We nurtured the client. We structured the client. We packaged the client, and we're hand delivering a ready-to-go underwritten client in our system to a bank to issue the credit line. So that's as gift wrapped as you can get it for the bank. And the bank thus far had no cost of acquisition, no marketing expenses utilized for this acquisition. So the bank says to us, hey, Fundable360, thank you for hand delivering this client to us. We're going to give you a success fee for doing that. That is how we stay scalable and sustainable to make sure that we can service these clients month after year after decades without interruption. So we continue to make sure we're doing a good job so we can find the right programs for the client's needs, and we continue to get a success fee from the banks so that that cycle can continue to wash, rinse, and repeat. It makes business sense all day long. I'm not ashamed to share it with you because we're disclosing everything so that you can understand. So as you're leaving this call and you're going about your day, you're not thinking, well, wait a second, there's got to be some gotcha moments. It's not. We're all adults here. We can handle the truth. And that's how business works, right? That's how business works. That's how Credit Karma offers you a Capital One on their system. Well, we're not so much Credit Karma, but we're operating under the same premise. If we can pre-qualify a client, the banks are going to thank us.